Mr. Alex Svanevik. And so Alex Svanevik is CEO of Nansen. Alex has over 10 years of experience in data science, management consulting, and cryptocurrencies. His academic background is in artificial intelligence and machine learning. As the CEO of Nansen, Alex drives the growth and adoption of the blockchain data analytics firm to provide crypto traders, hedge funds, institutional investors, and VCs with insights into the crypto markets. Enjoy your talk, Alex. Over to you.
Thanks very much, Lavinia. All right. So, that was my background. My name is Alex Svanevik. I'm the CEO of Nansen, one of 3 co-founders. Today, I'm going to be talking about NFTs and DeFi, specifically looking at market insights from on-chain analytics. So, as mentioned, my name is Alex Svanevik. I'm the CEO of Nansen. Let me first talk a little bit about Nansen, the company, and what we do. So we are a blockchain analytics platform. And what we do, which is quite unique, is that we bring out the data from public blockchains like Ethereum, and then we enrich that data with wallet labels. So that allows you to effectively understand capital flow on the blockchain and what people are doing, but also which entities are doing these different things. So if you wanted to understand, the flow of Ether or stable coins or different tokens between exchanges, you could do that with Nansen. But you can also understand the different capital providers or liquidity providers to different DeFi protocols. And so what our customers use Nansen for is primarily 3 things, all a part of the investment and trading life cycle. The first is that they use it to discover opportunities. That could be yield farms. It could be NFT collections that have recently been minted. And once you've discovered those opportunities, you can also use Nansen to perform due diligence. So if you wanted to understand who's been providing liquidity into a smart contract, as I mentioned earlier, you can use Nansen to get a breakdown of those liquidity providers. And in some cases, we can even know, which funds or even angel investors and so on have provided that liquidity. The final thing you can do is you can also defend your portfolio by getting real-time alerts when certain events happen. So if there's a large transaction that takes place on the blockchain for a specific token that you might have invested in, you can get an alert through Discord, Slack, or Telegram to be made aware of this. Right now, we focus on Ethereum primarily, but we're broadening that to what we consider the broader Ethereum ecosystem. So it includes other chains like Polygon and also Binance Smart Chain, but also layer 2 solutions that we're rolling out, such as Optimism and Arbitrum. So that's briefly about Nansen, so you have that context. And today I'm going to be talking about, as I mentioned, DeFi and NFTs. We're going to be looking at some trends or observations within both DeFi and NFTs. And we're also going to briefly talk about where DeFi and NFTs meet at the end. So I think the key thing that has changed in this market cycle versus the former one in 2017-18 with a massive run-up is that it's a lot easier now to track what the smart money is actually doing. And with Nansen, you can also track what the biggest VC funds do, what the biggest market makers are doing on-chain, and so on and so forth. So here's a screenshot that just shows various different entities, some of them known, like Alameda, which is a big market maker and trading desk, as you probably know. But you can also see other behavioral labels like Smart LP, which is a smart liquidity provider. And I think a unique thing of this cycle is that you can now track this. And in the past, it used to be the case that you were pretty much trading in the blind. And many people have told us that, after they started using Nansen, they can now see. Before Nansen, they were blind, but now they can see, which I believe is a verbatim quote from one of our customers. So this is one trend that we're seeing now. And that also makes the whole investment experience much more social, because you start considering who else is investing in this token. right? Who else is picking up this NFT collection? And that suddenly becomes one of the key information pieces that you have to take into consideration when you do due diligence to make investment decisions. I think another thing that I think is quite interesting is that because of the transparency of blockchain, which is quite unique if you compare it to something like traditional finance, is that every single wallet that you can inspect on the blockchain is potentially a masterclass. It is potentially an address that you can study and learn from. And so here's the screenshot just from one of the wallets that we plugged into our wallet profiler dashboard, and you can see which different protocols this wallet has been interacting with regards to incoming Ether and outgoing Ether. But you can also see tokens that are coming in and going out as well. Everything from USDC and DAI stablecoins, right, to Alchemix, Maker, governance tokens, and so on and so forth. And you can actually spend quite a lot of time looking at these smart money wallets to figure out, what are they doing on the blockchain, and perhaps you could be doing similar things. And so this is another example of how trading is actually a very social. It's a very social thing that you can do on the blockchain. So maybe a bit controversial, but you can also look at say public figures wallets, right? Sometimes they will go public with which wallets they own. And this is particularly common in the NFT space because NFTs are uniquely assigned to an owner address, right? Any NFT that someone is showing off, if it is a unique one, will reveal the address of the holder. And so Mark Cuban has famously posted tweets where he's looking at NFT projects, has invested in NFT projects, and also DeFi projects. And within Nansen, you can see some of these labels that they would get associated with them. And so obviously there's the Mark Cuban label itself because he is a public figure and has opted to share with the world that he owns this wallet. But he also has a few interesting behavioral labels. So uncommon NFT collector means that this wallet is in the top 10% in the number of NFT transactions, or ERC 721, which is a standard for NFTs. You also have a heavy DEX trader label, which means that they have made trades on DEXs. And in fact, the heavy qualifier means that they're in the top 1% in number of trades or in volume traded, but not both. If they would be both, they would be classified as an elite DEX trader. But so clearly they're using this wallet to make DEX transactions, which is something I'll talk about a little bit later. We can also see that they're a sandwich attack victim. And this might be a little bit technical, but effectively sandwich attacks are something that can happen on the blockchain where you get front run if you're trading on a decentralized exchange. And in this case, we can see that Mark Cuban's wallet has actually been front run at least once, and they've been tagged as a sandwich attack victim. That's not uncommon. In fact, you might be surprised to learn that your own wallet was at some point sandwich attacked, where a bot intervened effectively and was able to front run you and pick up, say, some tokens right before you wanted to buy them and then sell them right back afterwards, so that you ended up with a worse price than you would have gotten if that had not happened. So this is interesting stuff that you can actually pull directly out of the blockchain, and it's one of the key things that we focus on at Nansen. I think one more macro observation that I would highlight in terms of DeFi trends is that since the last bull run in 2017-18, decentralized exchanges have really proven product market fit as a category of products. And I think this is really one of the best examples of how blockchains are useful and how, in fact, many people are moving from centralized exchanges onto decentralized exchanges. And I was listening to a podcast with Eugene or Evgeny from Wintermute, a market making firm, and he effectively said that eventually he believes all of the liquidity will move to decentralized exchanges, and the argument is quite simple. Effectively, if blockchains work, if blockchains are a good technology, then of course the trading should happen on the blockchains, which means on DEXs, right? And if blockchains do not work, well, then the whole crypto sector will probably implode, including the centralized exchanges. So it seems like there's a trend towards DEXs in terms of volume. There's still challenges, of course, to tackle, and there's a lot of innovation happening, for example, around this front-running challenge and other challenges that exist, throughput and so on, transaction fees, slippage, all these different things. But there's no doubt that there is very strong evidence of product market fit for DEXs, which is a really exciting trend, I think, personally. Of course, another thing that many people are aware of is yield farming. And so there's a lot of stuff you can say about yield farming, but and most people might know what this is, but effectively this is when you are typically providing liquidity in some form, and you're rewarded for providing liquidity by getting a governance token of whatever project it is that you're providing liquidity to. The thing is with yield farming is that a lot of it is quite mercenary. And so we found that 42% of yield farmers that enter a farm on the day it launches will exit within 24 hours. And so that shows, first of all, how fast these markets move, but it also shows that there's not always a lot of loyalty when it comes to, actually collecting these liquidity rewards. And we also found that around 16% will leave within 48 hours. And by the third day, 70% of these users will have withdrawn from the contract. And one of the reasons, of course, is that basically the emissions or the yields that you're collecting over time will decrease over time as more people come into the farms. And so people will move on to the next thing. So effectively, the capital is often quite mercenary in DeFi, and users tend to put their capital to work where they get the highest yield. So that's another trend that we have observed purely by looking at the on-chain data of what people actually do on the blockchain. I think here we start moving into NFTs. And NFTs, there's a lot of stuff you can say about it. I would say it's another great example of product market fit for blockchains. And again, they had a bit of a slow start. With, obviously CryptoKitties was huge in 2017, 2018. But after that, there was, not a lot of enthusiasm around NFTs for a long time. Recently, we've seen a lot of enthusiasm for it, a lot of trading volume, a lot of activity, lots of projects being, issued and born every single day, which I'll get back to a bit later in the presentation. But they're a great example of how blockchains are useful and how, in many ways, they're changing industries beyond finance, because NFTs, they touch on art, right? Digital art. They touch on gaming. They can even be used for things like real estate or insurance policies. So they're in many ways almost like a pseudo category. They are actually used for a lot of different things, and it is possible to believe that NFTs can be extremely valuable in one sector, but not so valuable in another one. For example, one sector that I personally believe in a lot is gaming. So I think NFTs are going to be massive when it comes to gaming, because there's already economies within these gaming universes where you can buy and sell items. And it seems absurd that you should not be able to actually own these items outside of the game itself. And so being able to bring out gaming items and so on from different games, and then perhaps bringing them onto other games or into other ecosystems, seems like an obvious trend that will happen. And there's a lot of evidence of this already with projects like Axie Infinity, Decentralised, where you can buy virtual real estate, crypto voxels, right? Metaverse oriented projects, which have effectively driven a lot of the enthusiasm for NFTs. But another thing that has been very hot recently is, of course, NFT collections. And new NFT collections are born literally every day. Several new collections are born every day. And one of the things we do in Nansen is we have a suite of NFT dashboards. NFT Paradise is where you start, and that's where the screenshot is from. This shows the top collections in terms of trading volume on the Ethereum blockchain. And so you can see a lot of different things here. In this screenshot, you see that CryptoPunks, which is one of the more classic NFT collections, is at number one with more than 7,000 Ether worth of trading in the last 24 hours. You also see other projects like Bored Ape Yacht Club, Art Blocks, and a more recent one called Robotas, which if you see at the right of this table, you can see that when we took this screenshot, Robotas was created as a smart contract only 31 hours before. So, you can actually use this dashboard to get informed of new NFT collections, and literally every day we see a new one pop up on the radar. This tends to spike gas prices as people mint these new NFTs and become, the primary owners of these NFT items. And then afterwards, there's a lot of really interesting market dynamics where some people are trying to flip them, other people are trying to figure out which ones are the rare items. And of course, all the community building that crypto is known for takes place around these NFT collections as well. So this is a really interesting trend, I think, and there's been a lot of activity around the NFT collections that get issued on the blockchain. But one thing that's important when you look at these NFT collections is to perform some due diligence, right? So you don't only want to know, what's the hottest one right now. You also want to get additional information on things like what does the trading volume look like over time, which you can see there down to the left. But you can also see what about the prices, right? NFTs are different than fungible tokens or sort of the normal tokens that we're used to, in that every token is unique. So that means you can't come up with one price for the whole collection. You have to look at the pricing ranges. So typically you look at a floor price or a minimum price within the collection. That's the red line that you see down to the right. And you can look at the highest price within that day, which is the blue line. And then you can look at the average price, which by definition will lie between those two lines. And this can inform you, what does that distribution of pricing look like? Are people buying up sort of the floor tokens, which would basically means the cheapest tokens in that collection? Or is this one where you want to look at the more rare tokens? That's where the primary value lies. These are all things that you can figure out by just looking at the on-chain analytics. And you can also look at who is actually buying these, right? And so figuring out if NFT influencers, different investors are putting funds into these collections. That's another thing that's very important. So a bit more on NFTs. So we also have a feature for NFT leaderboards, and this shows the top investors. And so this slide might be a little bit dense, but the highlight here is that you can identify the top investors in DeFi. And if you look at Pranksy, who's a well-known NFT influencer, he's spent close to 2,000 Ether on NFTs, and he has made some incredible profits by basically purchasing those and selling them off later at a higher price. Of course, he ends up holding some of these tokens as well, but he's been a very important figure in the space of NFT collections. But you also have other investors like @blank.eth, which is an ENS name, right? An Ethereum name service username that you can see on the blockchain. And they have more than 5,000% profits on investments. And you can drill down and you can look at the realized gains per NFT collection. But this is just some of the stuff that you can pull out from the leaderboard. And it's pretty interesting to see what people are doing investing in NFTs. Okay, so what about DeFi and NFTs? Where do they meet? Where do these worlds collide? I think one good example is Uniswap v3, where effectively, if you're a market maker or liquidity provider on Uniswap v3, what you actually own is an NFT. So the NFT represents the funds and the range in which you want to provide those funds or that liquidity for a specific pair of tokens. And so this, again, sort of reinforces the point that NFTs are actually a really broad category of digital assets. they're not just used for digital art, they're not just used for gaming, they can also be used for, pretty technical implementations of decentralized finance as well. And so this is, I think, a pretty interesting example of where DeFi and NFTs meet. And a cool thing that Uniswap did was that they created these sort of generative art pieces that uses some of the data from the different liquidity provider positions, and you can see them very visually if you look at them on OpenSea and so on, which is a pretty cool and creative idea. And many people ask us, what about DeFi and NFT usage? Is it this? Do we see the same people engaging with DeFi as people who engage with NFTs? And I think the answer here is a bit nuanced. So if we literally just look at the on-chain data, and you can classify wallets into different buckets, you can say, how active is this wallet trading on DEXs? And you can also look at how active is this wallet trading NFTs. You can see that there's actually a bit of sort of like an all over the place type of view here, where you have people that fall into all sorts of categories. But generally speaking, there is some correlation where the more active a user is trading in DeFi, the more likely they are also to be an NFT collector, which makes sense because people, they're operating in the same space, they know how to use wallets, they have liquidity in their wallets, right? And they might want to put some of that liquidity into NFTs. But there are many users who effectively only have an interest in either NFTs or DeFi. If you speak to DeFi investors, many of them don't really understand the enthusiasm around NFTs, and they're not really interested in it. They are happy basically just trading tokens, providing liquidity, making perhaps seed investments in projects around DeFi and so on, but NFTs is not something that they are interested in. And conversely, more and more, we're seeing people who are interested in NFTs, but they have zero interest in decentralized finance. They have no interest in, market making, trading, leverage, none of that stuff. What they care about is the sort of game of collecting NFTs, for example, or participating in these different metaverse communities. So I think this is actually a super interesting research area, and I would love for us to do even more research on the overlap. But what I would expect is that over time, we will see more and more of a decoupling, and the NFT space on its own will basically, in many ways, decouple from the rest of the crypto market. And you can sort of see it to some extent already, as the Bitcoin price and price of Ether to some extent has moved sideways. Ether has been moving up a fair bit lately, but there's generally been sort of a consensus that we're going sideways in the market. But NFTs have been pumping. So premium NFT collections like CryptoPunks, Art Blocks, Bored Apes, prices have just been going through the roof. So I think this is a really interesting maturity sign of the crypto sector, where you see different markets popping up, and you don't see a strong correlation between everything that happens within crypto. So with that, I think I'll open up for a couple of questions. Okay, I'll try to be quick. What is Flashboy? This means effectively a address that has been active in flash loan activity. So the name Flashboy comes from a book by Michael Lewis called Flashboys about high-frequency trading. So that's where the name comes from. To which extent do you think exchanges which are marketed to be decentralized are technically and literally really true? Good question. I think the term decentralized is, in many cases, an aspiration. Of course, it gets more and more relevant as regulators start getting involved, and decentralization actually becomes quite important. In addition, of course, custody of funds and things like that is very important. But there is a scale. Like, decentralization is not a switch. It's not either or. And yeah, I think the next question was probably the same one. So I think we managed to finish there on time.
Thank you so much, Alex.
Thank you very much.